business structure artists. Oh, there we go. He'll cover the most common business structures for artists, the LLC, how it compares to an S Corp, and share expert tips on selecting the best business structure for your businesses. Plus, we'll go into how collective works and how it can benefit you even outside of tax savings. So with that, Luke, I will pass it over to you.
All right, Mary, thanks so much. I'm really excited to be like around such successful artist and whatnot. And I'm hoping if I do a good job and you like the information, someone somewhere gets me a deal with Louis Vuitton or something like that. But yeah, let's just jump right into it. And what I'm going to do is I'm going to go ahead and share my screen and share a presentation. And yeah, like Mary said, my name is Luke Robinson, and I'm a business advisor here at Collective. And also, I'm an enrolled agent with the IRS. And essentially, what that means is I chose to dedicate my life to my career, not my life, my career, to the most interesting, riveting topic on people's mind, taxes. But today, I've got a presentation to share with you about Collective, of course, but also about LLC versus S Corps, which is right for you. And this is particularly relevant for artists and how they do business. Here's the agenda. For one, of course, we'll just go over an overview of what we're going to do. But then let's go into some self-employed taxes 101. You know, when I say taxes 101, I mean the basics. What do you do when you're self-employed tax-wise? How do you manage your accounting? How do you pay your taxes? Things like that. Then we'll sort of discuss the difference between LLCs and S Corps. Then we'll discuss how to choose the right structure. Should you go with an LLC? Should you go with an S Corp election? Should you just be a sole proprietorship? Should you have nothing? It's a complicated question to ask. And then, of course, how to get started with all this, how to handle it. And then at the end, we'll have some time for some Q&A. And you can ask me some questions if anything was confusing or you'd like to get some guidance on any of this. Also, let's get the legal stuff out of the way. So technically, this webinar, it's an educational piece. Don't consider this, official tax advice or legal advice or anything like that. Before you do anything, like before you act on this information, it's always a good idea, consult with a CPA, consult with a tax attorney before you do anything official. Well, for one, a quick word about Collective. We're the first all-in-one financial platform, designed specifically for self-employed people. And, before Collective, things, to be honest with you, were kind of in the dinosaur era when it comes to taxes and accounting and all that. Usually you'd have to go to a brick and mortar type of situation, to a CPA and, email your documents, mail your documents and all of that. But what Collective has done is use a tech-based approach to kind of rope it all into one company, one spot. This is your money when you're self-employed. It's all over the place. You got to worry about your business setup. How do I even start the business? And, what structure do I need? You have to worry about ongoing financial reports. That's really important when you get into a more, solidified business structure. You got to know how to run payroll if you go the S Corp route. There's a lot of things that you got to juggle when you're self-employed. When you need to make a financial decision, it's tough to do that when you're self-employed because it all connects with one another. It all relates. And your financial reports, if those aren't done correctly, it's going to be hard to save for retirement because you won't know your deductions, you won't know your contribution limits. And then, of course, that relates to bookkeeping because if you don't know that, then how can you accurately reflect your books? It's a whole web of stuff when you're trying to make a financial decision. At Collective, we try to align all that. Essentially, like I said, think of us as kind of an all-in-one solution for a self-employed person. We pretty much do it all. So this is a poll, and I've got my amazing assistant, Sarah, here, and she's running the webinar, and I believe she will start a poll. And the question is, what are you struggling with the most right now in terms of your business? Okay. Yeah. So I always try to guess this on what's going to be the most popular answer here, and I'm always wrong. But on this one, I'm going to say setting up your LLC or S Corp. I'm gonna guess that most people are going to choose that. We'll see if I'm right. All right. Okay, we're probably good to end it, Sarah, if you can. Oh, well, I was wrong, but I was barely wrong. So, okay, so finding ongoing financial advice. And that makes a lot of sense. Yeah, I spend my day talking to self-employed business owners, and I hear that a lot as well. All right, let's cover the basics of what it means to be self-employed. First, let's talk about the taxes that you guys pay. For one area, you've got your income taxes. And that's what most people think when they think of taxes in general. And the income taxes, it's a federal tax, and it's marginal. It's marginal rates. So each different chunks of your money is charged different rates. So, for example, and those rates are usually between 0 and 37%. So, if you're making $100,000, 10,000 of that, the first 10,000 of that might be taxed 10%. And then from 10,000 to 30,000, it might be taxed 12%, and so on and so forth. That's kind of how the income tax works. The self-employment tax is completely different. The self-employment, it's a flat tax rate. It's 15.3%. Literally what it is, and I think surprises a lot of people, but it's Social Security and Medicare taxes. It's literally what it is. It goes to fund our Social Security and Medicare programs. So, and what's interesting about the self-employment tax is obviously you pay it when you're self-employed, but you also pay it when you're an employee of somebody else. It's even the same tax rate. It's 15.3%, but the only difference when you're an employee, your boss pays half of it for you. Just by law, they've got to pay half. But when you're self-employed, you pay the full 15.3%. You pay both halves. And that right there is why it's so expensive to be self-employed. And I know it's frustrating because when you're self-employed, you're wearing all the hats. You're running the business. You have more responsibilities than a typical employee does. But unfortunately, you are paying more in taxes because of this self-employment tax. And to kind of outline the difference, this is an example of someone that makes around $100,000. And when you're an employee, when you're getting paid a paycheck of 100 grand, your Social Security, Medicare tax, or self-employment tax, whatever you want to call it, is 7,500. It's half. When you're self-employed, it's 15,000. So it's a big difference, obviously. Okay, let's go through what it means to be a sole proprietorship in an LLC, in a tax context. What happens, of course, is you have your total revenue, and this is usually called your gross revenue. That's every single dollar that your business makes in total. And then you have your tax deductions, which is essentially just another word for business expenses. You can take a home office deduction if you work from home. You can write off some mileage if you're traveling, business licenses, all that kind of stuff. And you'll subtract that, of course, and you'll either have a profit or you'll have a loss. You'll lose money potentially. Some people lose money in business their first year, especially, or first or second year. And what happens is either that profit or that loss that is reported on your personal tax return, on your own tax return. And then whatever that is, the profit, of course, is subject to the self-employment tax, the 15.3%, and it's subject to the income tax as well. You pay both of them. Why does this matter? Why does it matter if you're an LLC or an S Corp or a sole proprietorship? Why is this so important? And the answer is how you're taxed is different. And the tax is usually, just taxes in general, is usually a business's highest expense. So to optimize that is usually a good idea. What is an LLC? It's always, oddly enough, when you're talking about S Corps, it's always a good idea to start with what an LLC is. An LLC is a legal structure. Essentially, it's just like a corporation. A corporation is also a legal structure. And both LLCs, corporations, partnerships, whatever, they're formed with your state, usually your state of residence. And it's formed with the Secretary of State. Now, it usually requires some sort of formal organization process. You have to file what's called articles of organization with your state to form your LLC, usually with your Secretary of State's office. And then typically an LLC is required to file an annual report, letting the state know who manages the entity, if it's still in business and whatnot. Now, this is not a tax return. It's an annual report. It's something different. And there's some states that don't require annual reports. They required it, every 2 years or something like that. What if you don't have a legal structure? What if you don't have an LLC set up? You're a sole prop, otherwise known as a sole proprietorship. And essentially, there's not much that you need to do when you're a sole prop. If you have self-employed earnings, if you're making money, freelancing or, doing whatever you do, then you're automatically a sole proprietorship. That's what you're considered. And legally speaking, there's no difference between the business financial life and your financial life. There's no separation. Technically, if you're a sole proprietorship, you can use a personal bank account, personal credit cards to do business in, because it doesn't matter. And your business profits, of course, are passed on to you, the individual, and reported on your personal tax return. And you don't have anything to file when you're a sole proprietorship. You don't have to worry about, you have a tax return to file, you have a personal tax return, but you don't have any sort of annual return or annual report that you got to file with the state. And here's some basics about LLCs. For one, requires registration with your state, of course. What it does, literally, it's called limited liability company. So it limits your liability from business. And typically, if you structure it correctly and do it right, then your personal assets and personal income is protected, from any sort of business lawsuits and creditors. Also, it lends credibility to your business. It looks more professional when you have a business structure set up. It allows for multiple owners. One or two or more people can be on an LLC. And essentially, when that happens, you now have a partnership. That's what a partnership is when two or more people are on an LLC. That's all it is. And of course, the business profits are passed through to the owner or owners if you have a partnership. Okay, yes, an LLC is automatically taxed just like a sole proprietorship. There's no difference tax-wise between an LLC or a sole prop. And the only difference is you have that liability protection, and that separation between your business, but you're taxed exactly the same way with the federal government versus an LLC and a sole prop. Unless, and this is where the S Corp comes in, unless you ask the IRS to change your tax treatment. So this is just kind of a quick difference between a sole prop and an LLC. The only difference, or really the only similarities, are business profits are passed through to the owner, of course, and you still pay self-employment tax. Both of them do the same amount of taxes. However, with an LLC, you can do more stuff. For one, it does require registration with your state, which a sole prop does not. It provides that legal shield, but you can have multiple owners in an LLC. It doesn't make sense to have multiple owners in a sole proprietorship, because a sole proprietorship is by definition just one person doing business. So you can't have a partnership as a sole prop. Also, you can't change the way that you're taxed when you're a sole proprietorship. You can't become an S Corp or change your tax election with the IRS if you're a sole proprietorship. You can with an LLC. And here we are, finally. What is an S Corp? What does it even mean to be an S Corp? An S Corp is a tax election. And I know that's confusing because the word corporation is in this thing, of course. It's called an S corporation, but it's not a corporation. It's not a business structure. It's a tax election. It's a way to ask the government to tax your business a certain way. So, like I mentioned earlier, the IRS automatically decides how each business structure is taxed. If you're an LLC, like I said, you're automatically taxed as a sole proprietorship. It's exactly the same. However, an S Corp is asking the IRS to tax your LLC under the S Corp tax rules, which could save you money on taxes. This is what happens to your tax world when you're an S Corp. For one, before you're an S Corp, you pay self-employment taxes, the 15.3% I was discussing, on a huge portion or the whole portion of your business income, of your self-employment income. However, S Corps no longer pay self-employment tax on the business profits. And here's what that means. When you make an S Corp election, and again, that's paperwork filed with the IRS, it's filed with the feds. And essentially what happens is it creates kind of like an employee-employer relationship between you and your business. Now, you're still the owner, of course, it's still your LLC. But for tax purposes, you literally are also an employee as well. And since you're an employee, you will pay yourself a wage. You'll pay yourself a salary just like you'd receive if you work for someone else as a W-2 employee. But the advantageous sort of thing about S Corps is that the only chunk of your earnings that are subject to the self-employment tax is your salary amount. The rest, your business profits, are not. They're not subject to the tax. And especially if you're at a certain income level, that could result in thousands of dollars that's knocked off your tax bill. So just kind of a recap on how it works with sole proprietorships. Your profit or loss, whatever it is, well, mostly it's just profit when it comes to taxes. So if you have a profit, you're subject to the self-employment tax on it, and you're subject to the income tax on it. With an S Corp, it's different. With an S Corp, you have your revenue, you have your total gross revenue at the top, and then you've got your salary amount, which is, whatever amount that is. You've got to pay yourself a reasonable salary. It's got to be reasonable for the type of work that you do. But you've got your total revenue at the top, you subtract your salary, and you also subtract your expenses, your business expenses, like your home office deduction, mileage, things like that. And your salary are subject to now payroll taxes, which is just another word for self-employment taxes. That's what payroll taxes are. So your salary is still subject to that tax rate. However, once you subtract your salary and your expenses, you have the S Corp profit or loss. You have your business profit or loss. And if you have a profit, that just flows over to your personal tax return. Both your salary and your business profits flow over your personal tax return. And then, of course, you're not subject to the self-employment tax on your profits, but you're still subject to the income tax on your profits with an S Corp. So here's outlines it a little bit better here. So on the left here, if you're a sole proprietorship or if you're an LLC, you can make the same amount of money. You can make $160,000, but you can't pay yourself wages. It's just, the profit is your profit. There's no wage involved. So what that means is the full $160,000 is subject to the self-employment tax, the 15.3%. So, and that's a big chunk. I mean, of course, that's approaching 25 grand in taxes right there, just in the self-employment tax. Now, if you look over here at an S Corp, it's the same amount of money. You're still making 160 grand in total, but this person, for whatever reason, has decided to pay themselves $60,000 in wages, in W-2 salary. Now, only that $60,000 is subject to the self-employment tax, the 15.3%. So instead of 24,000 or 25,000, that drops down to 9,000. Big difference, obviously. So, I mean, just making the same amount of money, but just changing your tax structure is saving this person close to $15,000. Okay, like I said, your salary, and this is what the IRS says, your salary must be reasonable. And people will ask me about this, that they'll say, okay, well, if I'm only subject to the self-employment tax on my salary, then why not just pay myself, a $1 salary or something like that, and then just take all the rest of the money out as business profit and shield it from the self-employment tax? And my response is because unfortunately, if you did that, you would probably get audited because the IRS, what they say about the salary is that it must be reasonable. If let's say that you're making, your business in total is making $200,000, but you pay yourself a $5,000 salary, it's likely that the IRS would look at that and think that was unreasonable and might audit you. But however, there's no set standard. The IRS doesn't provide any sort of, objective way to come up with a salary. That'd be too easy, of course, but it's just a facts and circumstance test. It's an argument that you have to make to them. And either collective or your tax professional can help in kind of determining a reasonable salary. And also, your salary is a tax strategy, because the thing is the key is to pay yourself as low as possible and save on the self-employment tax, but not so low that you upset the IRS and you got to stay in compliance. How do you get paid from your S Corp? How does this even work? Really, there's three main ways that you get paid. For one, you have a payroll, which is another way of saying your salary. This is your salary amount. And what it'll do is whatever amount that is this will flow from your business bank account into your personal bank account, just like a check would, through our payroll processor. And that can happen weekly, monthly, bi-weekly, whatever's most convenient for you, we can structure it that way. Your distributions are another way you get paid. And your distributions, that's your owner's profit that isn't subject to the self-employment tax anymore. But how you take a distribution is it's very similar to taking an owner's draw. You just manually transfer money from your business bank account to your personal bank account. You can do that whenever you'd like. And then also, what changes with an S Corp is some of your expenses are actually reimbursed to you. So, for example, when you take the home office deduction, you're writing off personal expenses. So you can write off a portion of your mortgage interest when you work from home, your utilities, cleaning fees, things like that. And you can still do that with an S Corp, but it works a little bit differently. And what happens is the S Corp itself will reimburse you for those expenses. So let's say that your cleaning fee, the amount that you can write off for business is $100 that month. The S Corp would pay you $100. It would write it off as a business expense, and that $100 isn't taxable to you personally. But however, the good news is if you come on board with us, Collective will handle all the record keeping. Okay. Here's some additional benefits of an S Corp. For one, more tax deductions. There's more expenses. There's more strategies that you can employ to increase your deductions for taxes. Also, higher retirement contribution limits. And this is a big one because now that you're both an employee of your own business and you own it, you can contribute to self-employed retirement accounts as both the employee and the employer. So you can do almost like a match, and you can increase the amount that you can save for retirement. And then, of course, you have what's called an accountable plan. And that's when the S Corp reimburses you for your home office, your mileage, and your other personal expenses. Okay, here's kind of outlines the differences between an LLC and an S Corp. Both of them, because technically they're both LLCs, one just has an S Corp election, both of them have a legal shield. You still get that personal protection. It's still a pass-through entity. All of this stuff still passes through to your personal tax return. So there's no corporate federal taxes or anything like that. It's just passed through. Now, the difference lies in the self-employment tax, though, is when you're an LLC, you are taxed self-employment tax on all your profits. Doesn't matter. When you're an S Corp, it's just your salary. Now, income tax, that doesn't change much, between LLC, between S Corp. The income tax pretty much stays the same. And then, of course, the difference is you can't pay yourself a wage with an LLC. You can only do that with an S Corp. Which one is best? What kind of stuff do you look at when you're trying to decide, do I just keep an LLC, or do I go ahead and I make an S Corp election? And LLCs are best for new businesses with very little earnings and uncertainty. Typically, what we say is $60,000 in a year. If you're netting, and when I say net, I mean your total gross income minus your expenses. If you're netting anything less than 60 grand, we suggest to hold off on the S Corp for now. An S Corp, however, is best for people that want to take advantage of retirement and kind of take advantage of the enhanced retirement rules, who have a little bit more, who earn more than 60K in profit per year, in net profit, and who have enough cash flow to make regular payroll runs, to pay yourself consistently a paycheck. All right. Now let's talk about loan outs. And I think that this will be particularly relevant for this bunch, because I know you guys are a bunch of amazing artists. And a loan out company is pretty common with artists, actors, writers, sort of other creative professionals, people like that. And essentially, a loan out, to be honest with you, long story short, a loan out is usually an S Corp. It's a separate legal entity. So it's either an LLC or it's a corporation. And it's usually an S Corp. And a loan out, what it means is you're considered an employee of your own company, whether that be an S Corp, a C Corp, whatever you have set up. And you loan out your services via the company, is essentially what it is the company itself loans out your services as an employee. And essentially, the benefits of a loan out are similar to the benefits of an S Corp. Is, for one, of course, you have tax advantages. Like potential to do self-employment tax, take advantage of business deductions, of course. And of course, it separates personal and business liabilities, protecting assets. And of course, it adds professional image. It adds credibility to your business. Like, when you're, signing a contract and it's got LLC behind it, it just makes it look a little bit better. All right. How do you start one of these things? How do you start and operate your S Corp? You got to set it up, for one. And for one, the first step is to create an LLC. That's a good first step in becoming an S Corp. And that's done by filing articles of organization with your Secretary of State. You can usually do that on the Secretary of State website. You can typically do that online. And file other, state required paperwork. There might be, some sort of, certificate of organizations or something like that you might have to file too. Then it's a good idea to draft an operating agreement. And an operating agreement is essentially just it's kind of the legal document behind your LLC. It outlines who owns it, how it's run, and what the LLC is all about, essentially. And it's useful if the LLC is ever involved in a court battle or anything like that. It's usually a good idea to have an operating agreement on hand. Then, after you set up an LLC, you make an S election. And that's before you can even do that, though, of course, you've got to get an EIN with the IRS. And an EIN, that's an employer identification number. It's essentially like the social security number of your LLC S Corp. File the S election. And that's paperwork that's mailed or faxed to the Internal Revenue Service. Then you got to register for a payroll account. And that's typically done with your state. as well. But of course, you need your setup tools. When you have an S Corp election, you need bookkeeping. You need a payroll processor, some sort of payroll software to pay yourself. You don't want to do payroll by hand, believe me. And then, of course, you need to set up your money flows. It's a good idea to open up a business bank account. Once we get the LLC up and running, you can do that. Business credit cards, of course, is a good idea to start building business credit. And then change expenses and customers and all your income, change all of that over to your new business bank account and new LLC. Then let's talk the operations of an S Corp. You'll need to file business and personal tax returns. You now have 2 tax returns when you have an S Corp. It it springs into existence when you make an S Corp election. And usually you've got to do it on both the federal and the state level. A lot of states require S Corp tax returns too. You'll have to file payroll returns quarterly with the IRS and usually with the state as well. You'll need to maintain your entity, file the state paperwork every year or every 2 years, whatever it is to maintain the existence of your LLC. You'll need to maintain minutes and notes of, any sort of important changes that are done on your LLC. Let's say that, you make a decision to change the operating agreement or any sort of agreement between partners or whatever. You'll want to maintain the minutes and notes on when you decided to do that. And then, of course, you need to keep up with your books and tax obligations. It's a good idea to maintain your books monthly, especially since you're paying yourself a consistent payroll. And then pay estimated taxes, of course. Those pesky little things. Oh, okay. And here we have another poll. So I know that was a lot, but knowing that, who's ready to start an S Corp? Like, who feels that their business is ready to go the S Corp route? Okay, and we've got 3 options here. And it's okay if you're still not sure. That's all right. We've still got a little bit more of the webinar, and you'll always have a chance to, especially if you speak with Collective, you'll have a chance to talk to a advisor that'll go through your situation. Hey. All righty. I think we're good to move along here. Ooh, not just yet. Okay. Well, that's all right. And not everyone needs an S Corp. Especially if you're below a certain income level or you're kind of have some uncertainties about your income, then you might want to hold off on the S Corp election. Okay. Well, if you are ready for an S Corp or if you think that it could be good for your business, here's what it's like without Collective, juggling this stuff on your own. There's a lot of stuff, especially when you go from a sole proprietorship to an S Corp. There's just a lot of stuff that is added onto your plate that you didn't have before. You've got to handle payroll. You've got to calculate how much to pay yourself, and protect yourself from audit and, keep it reasonable and whatnot. You have to deal with the state on an ongoing basis and file your payroll returns and do all of that. So there's quite a bit to juggle when you go the S Corp route, if you do it on your own. With Collective, like I said, we're an all-in-one solution for an S Corp. So all of these sorts of things that I just went through, Collective will handle for you. So of course, we'll set up the S Corp, but we'll provide the bookkeeping, the payroll. We'll deal with the accountable plan and how those reimbursements work. And then we'll deal with the state on an ongoing nature as well. This is who we work with. Right now, we work with sole proprietorships, essentially people that don't have anything set up. They're just kind of doing it under their social security number. And then, of course, we work with single member LLCs. Right now, we don't work with partnerships. We don't work with LLCs that have two or more people on them. We just single member right now. And then, of course, we work with LLCs that are already filing as an S Corp, that already have their S Corp election. And then we give a suggestion to be making at least $60,000 or more before you go the S Corp route and before you join Collective. What's convenient about Collective is everything's done in one spot. It's one login to run the admin of your business. And essentially, of course, the first thing we'll do is form the business. We'll form your LLC with the state, make your S Corp election, get your EIN number for you so you can open up some bank accounts, and we'll also draft your operating agreement, which is, of course, a really important document behind your LLC. Then we'll handle the accounting. Hallelujah, right? And we do things on a monthly basis here. So we close up the books every month. So we'll categorize your transactions, reconcile your reports, and send them to you monthly. And then, of course, we'll handle the S Corp specific accounting, because when you become an S Corp, it becomes more complicated to run your books. And like I mentioned earlier, we'll deal with the accountable plan and your reimbursements and all of that. And each month for your financial reports, we'll give you a profit and loss statement, a cash flow statement, and a balance sheet each month for the books. And then we'll also handle payroll, because when you're an S Corp, of course, you got to run payroll on yourself. So we'll handle running the payroll. Also, if you have any contractors that are working for you, if you're paying anyone 1099 or anything like that, you can pay them on our payroll processor, and it handles all the tax paperwork and the 1099s. And of course, we'll handle the payroll tax filings, the quarterly reports, and all of that. And we'll also give you some guidance on your compensation, on your reasonable salary amount, which is important from keeping yourself safe from the IRS and audit. And then, of course, we'll handle your taxes. And when you have an S Corp, like I mentioned earlier, you have a business tax return. And that's usually done with both the feds, the IRS, and the state. So we'll file those for you. And then we will also estimate we'll do your estimated tax payments and reminders. Compliance and support. So, like I mentioned earlier, if you when you have an LLC, you have annual reports and things like that you got to file. And of course, we'll remind you each year to file those. And then, of course, you have ongoing support. If you need some help, some guidance, or you're not sure how to proceed on a certain way, you got a support team that you can message anytime and get some support. Excuse me, I've been talking so much all day, I've almost ran out of my voice here. Okay, here's something extremely important here. Collective, if you have an existing LLC currently, then we can still backdate your S Corp election to January 1st of this year. So all the money that you've made since January 1st can be roped under the S Corp tax rules. Now, we can only do that up to a certain date, but as of now, well, that's still possible. We can still do that. This is how much collective costs. This is the damage, right? And really, you've got two ways to pay. If you go the month-to-month route, it's $349 a month. Or, of course, you go the annual route. You can pay in full for 12 months at a time. That gives you 15% off the total price. So that comes out to around $3,500 a year. And then also, when you first come on board, you've got a one-time fee of $199. And that's essentially a setup fee. Like, It covers forming the business, cleaning up the bookkeeping if need be, and all of that. But the good news is collective is tax deductible. So you can write it off, of course, and who doesn't love that? Okay, and lastly, schedule a free call with us. And with Collective, we only want to bring someone on board and we only want to sell someone our services if we think that it would be a good fit for them. So, of course, we structure it in a way to where you have a call with a tax advisor before you even join Collective. And then this tax advisor will go through your situation, see if an S Corp is even in your best interest, see if Collective is a good fit for you. And if not, if you don't need to go the S Corp route, or if Collective isn't quite the place for you, then no big deal. We'll tell you that and we'll point you in the right direction. We'll give you some referrals and put you in the right, put you on the right path. But if not, we'll see if Collective be a good fit for you and then get started with the S Corp process if it is. And then of course, with this webinar, you get a special deal. The code is AMA, and bring this code with your call that you schedule with the tax advisor, and you get 1 month free and no onboarding fee. So you can essentially join Collective for free. It's quite a deal, I tell you. Okay. And I believe that is the end of my webinar. I think that I've got some time for some Ask Me Anything session.
Yeah, I would love to know if anybody out there has questions. I feel like when you're doing these things on your own, it's really daunting, the thought of paperwork. So a lot of times, for me anyway, it's analysis paralysis. It took me a number of years to figure out whether or not I wanted to be or should be an S Corp, and I do
Yeah,
not regret that election.
sure. And that's the problem with this tax stuff, and I tell this to self-employed people all the time, is that a lot of this stuff isn't intuitive. You know, it's very hard to just kind of research online and try to figure out what to do because a lot of the stuff doesn't make sense. It's just kind of arcane tax rules. So I've spoken to incredibly successful people, and it's taken them years to get on board with all this stuff.
Absolutely. Analysis paralysis, I think, at least for me.
Exactly.
So what I'm understanding then is when you're working with somebody, you're working with people who are going to be electing to be an S Corp. You're not working with just LLCs.
That's correct. That's correct. What we would do is, of course, when you have your call with the tax advisor, we'll determine if you should stay in LLC or go the S Corp route. Yeah.
Understood. Are there other fees that someone could expect when forming or electing to be an S Corp, like corporation taxes, that sort of stuff?
Well, so first of all, with Collective, the only extra fees are kind of the formation fees, like setting up an LLC, the registration fee with the state. Because when to become an S Corp, you have to have an LLC. So that's kind of included in the cost. Now, there are really, when it comes to additional S Corp taxes, on the federal side, that doesn't exist. Like there are no additional federal corporate taxes or anything like that. However, in certain states, a limited amount, like not very many, but in certain states, they have excise taxes on S Corp sometimes. Or even like in New York City, there's something called a general corporation tax. And that's there, it's just an extra tax on S Corps. But also that's kind of the information when you have your call with Collective, we'll go through that. See what state you're in, see if there are some additional taxes, and discuss if it even be worth it to go forward in some of those states.
Okay, no, that makes sense. I see a couple of questions in the chat, not in the Q&A, but I don't know if you want to address any of this. Why don't you offer services for partnership LLCs right now, LLPs?
Cassie, that's a good question. And the reason why we don't is because now it's funny. With Collective, one of the interesting, because my job is to speak to prospective Collective members and and to see if whether or not we'd be a good fit for them. And one of the, I guess, interesting objections that I have to overcome is a little bit of skepticism in the sense of, how is it possible that you perform all these services for this one price? Like, how is it possible to rope all of these services into one? And one of the reasons why that is possible is because collective is very niche. You know, the only reason why we're able to kind of rope all of these services into one is because we take kind of, a narrow, I guess, scope right now, single member LLCs. And if we opened it up to partnerships and whatnot, it would become more complicated, and we simply just couldn't do it for the price we do it right now. However, that's going to change. I guarantee you. Like here, I'm not really sure when, but collective will eventually open up, services for partnerships and additional services, just not right now. Okay, and yes, Janelle has a question. When you're saying profit of more than $60,000, do you mean 60K beyond what I currently pay myself, or just that I should be currently paying myself out at least 60K a year? Great question. So when I say 60K, I mean literally the total dollar that your business makes in total. You don't even have to be paying it yourself or whatnot, but the total dollars that your business makes in total minus your business expenses. But don't include paying yourself. Don't include anything like that. Just business expenses like mileage, your home office deduction, your tax deductions. That's what I mean by 60K. If once you make that subtraction, if that number is at 60K or above, that's usually when it's beneficial to go forward with the S Corp.
I like the follow-up question. Yeah, the follow-up question is, could you achieve liability protection as a sole proprietor by having a good business liability insurance policy? Would that be as adequate as being an LLC?
That's an excellent question. So no, it would not be as adequate as being an LLC. Now, having liability protection, it's still a sort of layer of protection, of course, but it's not, I guess it's not perfect. Like there's certain situations to where it might not get covered or something happened or, whatever. And then having an LLC is just extra protection. It just separates it a little bit further and makes it harder for people to go after your personal assets. So I definitely recommend, I'd certainly recommend having liability protection, but also pair that with an LLC, in my opinion.
And then Roger asked, would C Corp be useful for artists or their agents?
I mean, hey, like the world of taxes are complicated, and there are certain situations where C Corps might be in your best interest, but it's usually pretty rare. And really, when you're trying to determine whether or not you should go the S Corp or C Corp route, you're mostly thinking about ownership. Because with an S Corp, you can only have up to 100 owners in your business. You can't have more than 100 shareholders. So if you ever think that you want to issue a bunch of stock in your company, have some fundraising, or have more than 100 owners in your business, then you might want to go the C Corp route. But that's just usually pretty rare for small business owners.
Yeah, this is a good question too, because I don't remember the order in which I did this. When setting up your LLC, do you file for the EIN before or after submitting the paperwork to the state? I don't remember what order I did that.
That's a good question. Good questions right here. You file for the LLC first. Yeah, you file the LLC with the state first, and then you do an EIN number with the Internal Revenue Service. And if you come on board with the collective, then we'll get your EIN number for you. But just for some quick advice, like if you're not quite ready for an S Corp, if you're not ready for a collective, you can get an EIN for free on the IRS website. So don't pay like $100 or something like that to some random company. You can do it for free on the website.
That's good advice. I've heard this concern from a few people, so I would love to hear your thoughts on this. I've heard that you could hurt your future Social Security benefit by electing as an S Corp and not paying as much into Social Security. What do you think about that?
Such a great question. For one, yes, 100%. So because the self-employment tax, like what you're paying on, is Social Security and Medicare taxes. So when you pay less in the self-employment tax, you're paying less in the Social Security tax. You're contributing less to your Social Security account, essentially. So yes, I mean, theoretically, you'll get less Social Security if you do it. However, this is my perspective on it. Social Security, like in terms of a financial asset, it's not very good. You don't make a lot of money off Social Security. Now, it's a good buffer, of course. It's good that we have it and whatnot. But Social Security proceeds are invested in treasury bills, which have around, like, they barely keep up with inflation with how much they return money to you. So if you're concerned about retirement and concerned about the lack of LLC, take that Social Security tax savings that you're getting from an S Corp and throw it into a self-employed retirement account where it will be invested into more valuable assets and make you more money. And instead of 100 grand at retirement, you could have 900 grand at retirement.
Yeah, I appreciate that explanation. I didn't really have the answer for it, but that my initial instinct was if you have savings, you would put that into a retirement plan. That would be the purpose. So
Exactly. And it
thank you for
just,
answering that.
of course, and it just gives you more freedom. It gives you more freedom because some people may not be as concerned about retirement and they want to spend their money in other areas. So it's up to you how you spend your money.
Awesome. I actually have a question just about the payroll portion of what you do for the contractors and 1099s. Is it 1099s only? Because a lot, when we're dealing with compliance as, single member LLCs and S Corps as I am, we are now facing things like people being classified as employees and putting people through payroll and therefore their W-2.
Right.
That has to do with their classification as an employee versus a contractor. Is
Yeah.
that something you do, or is it strictly 1099?
Well, I mean, so how it works now is, unfortunately, I can't onboard anyone with current additional W-2 employees, just because it's complex, like onboarding people that have that. But you can, it's kind of strange how this works. But if you join Collective and later on you just have to hire an employee or employees come along, then that's fine. The payroll processor will still handle W-2s and 1099s.
Yeah. Yeah.
And
Often that is on a freelance basis. If someone, say, has a photo shoot and hires an assistant and that person is deemed an employee, they would need to be put through payroll. And there are payroll services out there that they use, but I was wondering if they were with Collective, if that's something they could process through you.
they could, yeah,
Yeah.
they could. It's up to, and it's up to so it's 5 people. So in
Okay.
it's an additional either 5 contractors or 5 employees. Yeah.
Got it. Okay, great.
Okay. See if I see any other questions. Wendy has a question. So does the layer of protection go both ways, protecting personal against business and business against personal? That's a good question. Yes, it should. I mean, and I'm not a tax attorney. Like I said earlier, I'm an enrolled agent. I'm not a tax attorney. So don't consider this legal advice, of course, but it should. I mean, when you have an LLC and it's separate, then yeah, I mean, the layer of protection should go both ways. I mean, personal lawsuits shouldn't be able to reach your LLCs. Now, the personal lawsuits could reach the income from your LLC once it reaches you personally. And eventually that income would reach you personally. So I think it'd probably be kind of hard to shield income from a lawsuit or something like that via an LLC.
Great.
Right.
Sure,
Oh,
there are other questions, but I don't see any in the chat.
I don't see any. Yeah. Great questions, by the way. Very intuitive questions.
And informed. We like to think our membership and their artists are informed. We try very hard to inform our, let's see, at what
Yeah.
point? Oh yeah, at what point would you suggest going from sole proprietorship to LLC? Think
I mean, this is kind of a tricky one because, I mean, kind of the conventional wisdom is that it's a good idea to get an LLC up and running just for the protection that it offers, just in
yeah,
general. But the thing is, I mean, if you want a practical answer, the less litigious your industry is in, or like the less risk that you are exposed to like lawsuits and or whatnot, the less important an LLC is, you know, just to be frank. So if you're just comfortable and like you just don't think you're going to get sued or that there's just not many ways that creditors
yeah.
going to come after you or whatnot, it's not as important to have an LLC. Yeah.
Well, and I think the industry that we're in and the types of clients with whom we work, there is quite a bit of liability floating
Sure.
around out there. And I even think about our, prop stylists on our roster quite a bit with the
Yeah.
amount of money they're spending on behalf of clients and that sort of stuff makes me
Yeah,
really want everyone to be buttoned up and protected personally.
sure. And like photographers, like
Definitely photographers.
my goodness, like who knows what can happen when you're at a shoot. So yeah, it's a good idea to get an LLC set up just in general. And they're pretty cheap. I mean, LLCs, well, I mean, in California, there is like an $800 a year entity tax and whatnot, but at the end of the day, I think it's pretty cheap for what it provides.
I agree.
Wendy has a good question. Do you have to get a new EIN and bank account from going to an LLC to an S Corp? No, you don't. So thankfully, if you've got your LLC and you've got your EIN that's connected to that LLC already, then we'll make an S Corp election on it, and you'll keep your LLC name, your EIN number, all that will stay the same, and you can keep your bank accounts as well.
Yeah, I think that was a good distinction that you made earlier, that an S Corp is not a formation, and is not a business structure, it is a tax election. So
Exactly.
that's why you can keep that EIN.
Exactly.
Great. That sounds like everyone should be scheduling a free call to figure out
Yes.
if it's
Yes.
right.
Yes. Oh, and also, and again, this is going to sound a little salesy, but I have to say it. It's really important, especially if you have a current LLC and you've made some money this year, at least have a conversation before June 30th. Because with us, because June 30th, that's the date where there's a deadline to where we can't backdate it to January 1st, after that date. And really no pressure. Like we have great tax advisors, like they're professionals, they're not pushy, and they'll see if you even need an S Corp. And if you don't, like we'll tell you so. Like we'll suggest waiting or whatnot. But if you do need an S Corp, or if you think that you do, at least have the conversation before June 30th, so we'll have time to backdate the S Corp election.
That's great. Cassie had a quick question, which might be more of a tax account. I think it might be more of an accountant question, but it's if you have an LLC set up in, I'm thinking that's Massachusetts, and you have a project and expenses in another state, do you pay multiple state taxes?
That one's tough. So this is called Nexus, and it's essentially like the tax code and how it relates in all 50 states. If you are working remotely and you're doing stuff that's going on in other states and whatnot, usually there's not much you got to worry about in terms of taxes in other states and whatever. If you're traveling to states and like are physically there and doing stuff in the state, sometimes, yeah, you have to pay state taxes. And unfortunately, I do not have a good answer. It's very complicated and it's different in every single state. So there's really no general answer for it, unfortunately.
Thank you for that.
Yeah.
Well, this was great. This was really informative. Like I said, I've been in business 21 years and I still feel like I learned something new every day about this. So.
Perfect. I'm glad to hear it. Yeah, and we really appreciate you guys having us on, and I love this stuff. I could talk about taxes all day.
Yeah, me too. Taxes and insurance.
Absolutely.
Well, great. Well, we really appreciate your partnership with the AMA. And again, anybody feel free to schedule that call. Can't hurt to just learn more about what you could and should do as a business. Protect yourself.
Absolutely. I'm looking forward to speaking to you guys.
Right. Thank you, Luke.
See you later.